Welcome to TradeTheNBI.com. This is John's reports for the 19th. Well, it continued to go back and forth. There was a slight dip below that algo level, and they fought right back above it and got us right above the ABM green line here. You can see on the daily as it comes across, and has been pretty steady for most of this dip and everything through as it waited for. There was no real reset of anything because most of this has just been momentum plays, and of course, the option situation is directly affecting this. That's all fine. It's going to continue to play out that way. Of course, you do see a lot of news about the hedge funds selling and this and that. It's much to do about nothing, but we can see that that is true because MBI White has been rising throughout all of this as we've had this major up move, and it's just an opportunity for both to get out at a higher value as well as opportunities to short when that comes. We haven't seen that increase in short necessarily, but we're getting very close to shakeout being on the positive side. And we're right at that meeting point here of the spider, even though it's been a pretty broad one of cyan moving back above green. Pretty close, minus 343, 364. So we'll see if that transitions, because that would definitely play a role. And you can see short-term buyers fading off as well. And if that orange crosses over there, then you start to get the switch over. And it's those crossing points that become relevant. In that case, then DOC red will have to continue to rise to maintain things, and we'll see any change in that as it develops, at least early on from an intraday standpoint. From an economic standpoint, the realities are still the same. And this is the quandary for the Fed at Jackson Hole. It's like, okay, you've got your data that you can clearly see is manipulated, where they revised the previous months to make the current month look good. But overall, they know there are difficulties, but they put themselves in sort of a hole, because how do you say, oh, well, inflation and month over month is easy, but not the overall aggregate cost of everything. And then you exclude, the real things that people actually, have to pay for, and it makes it tough for them, because what are they justifying? Lower unemployment, everything is perfect, the world is great. Why would you cut rates? Well, there's no necessary reason to do that. So what is this justification about even talking about rate cuts for? So it doesn't make any sense, at least to a real person. But as much as the jawboning is, you've got all this liquidity that comes in from new fund money, and you have their added liquidity the Fed throws at it. And that, of course, does exactly what it did from 2010 on, and it means you've got to go into an asset class that will give you a return. In this particular case, that's the market or commodities, and certain commodities like gold. And because you haven't seen crypto do anything significant because of its other unrelated issues, gold has been the primary mover of all of it, and secondary would be oil behind it. And that's the combination. That's why we look at these things, because it really gives you a broader reflection of what's really taking place. So from an NQ standpoint, you can see trailing still hasn't gotten up to that 19.9, which is the previous algo level where the same breakout from the S&P began. So a little bit differentiation there as far as value, but you can see from a reading standpoint, MBI reading pretty close to the same, and already beginning to see the differential, though, because you see the rejection here of cyan to green. So that becomes a little bit more interesting as you get the disparity between the two, and it's still a little further away from a shakeout towards positive. So the S&P has definitely been the broad leader on this. Whether the NQ will turn around and push things forward, it's a tough one, because every single reporting company has been talking about the consumer fading and that, and when consumer spending is the predominant driver of economic force, you got a problem. From a treasury standpoint, it's a disaster, because there's nowhere close to getting a yield relative to what is happening in the real world. You really want to put your money in treasuries? No. So it becomes an issue. Now, oil, obviously demand now becomes really a question. If demand is increasing, then obviously still productivity is strong, everything's still taking a move towards the positive, but if supplies get squeezed because of production cuts or whatever, or a lack of demand, and you see prices falling because demand is precipitously falling off, then you know that you've got issues as it relates to economic growth. Secondarily, on that though, any supply disruptions, because you have a lot of potential conflicts. The war in Russia with Ukraine is expanding. At any moment, you could have the Middle East conflict with Israel and that explode. I know they've been doing so much behind the scenes dealing to try and keep that under wraps, particularly as the Democratic convention is taking place now. They don't want anything to upend the headlines, so you know that the back channels on that are doing what they can, and you get these other bizarre situations where the euro is exploding because the expectation is the dollar is going to take a pounding, given this idea that there will be a rate cut. And that, of course, if it doesn't materialize, you'll see a major correction on that. But this idea that the eurozone is improved or something is ridiculous on its face as well. But there it is. We promised you back during these dips that gold would reach new highs, and it has. There's just no other direction for it to go. And you can see central governments, instead of buying U.S. treasuries like they did in the past, are buying gold. They're buying gold, or they're investing in other rare earths or commodities. And that's the hedge against what you see from poor monetary policy. And that's going to continue. Now, the struggles that Bitcoin and them, we've talked about these relentlessly, they're going to continue. But it's interesting to note that when you look deeper into the issue, the majority of largest holders and that haven't moved any of their Bitcoin in that. So supply is going to continue to shrink as far as availability. And if at any point there is a demand increase, you'll see explosive movements. So there's just no question about that. And of course, that varies depending on the different cryptos. Some of them have such large supplies in that that's not necessarily a thing. But that potential element still exists. And of course, there's always the regulatory thing, because governments are not going to let you replace making money. All you have to do is look back in history of the Florentines with the florin and things like that. When you go extra governmental when it comes to money creation, you're going to run into the people that have I guess you would call it the big stick, according to Teddy Roosevelt, that can really do what it wants. From a 50K standpoint, it's pretty darn clean. Cyan under red. Now, we did get a break about right in the middle of the morning there, going in between. It worked itself out, and you ended up with a brief period of MBI white lead. It broke down pretty fast below that, but you still have a softness at this particular stage with magenta under yellow and now below 25. So, and it's not coincidental that this previous algo level that it left marked up there is right where we're trading off against, because they do keep these values in line, and they become trades against. Now, of course, you look at all these positive extremes down here on the extreme, starting, right about in the middle there, and then they come back all the way to the beginning of the breakout as it took place. So there's plenty of that that's still going to take place and fill. It's just a question of when the reading becomes clear enough for that. But for now, I think that the whole point will be, during the week of the convention, and that to try and keep things as tranquil as possible. When we look at the current European trade right now, pretty decent selling coming back off, and they're just trying to fill it, clear out any stops and that took place from the trade. And this was the other day. So there was the pre-market sell from the European session, kind of what we're seeing right now. And then as soon as the market opens up, flood of buying, lifts it back up. And then in the post-market, which is what you're seeing in the current EU setup, they fill it back in to take back some of the movement. Now the question will be, they'll probably want to open this a little bit lower, and that will kill any of the call option gamma and stuff that's been created. And this is what you're going to see from an option play back and forth. And we'll just go with that. I know there was a question about the manipulation that takes place within the numbers, and yes, of course, the large players know it. But as far as that goes, they have the momentum of large capital reserves in order to apply, and they can drive direction. And in this particular case, as long as the Fed is relatively in an easy state, then you're going to see the market continue to rally under most situations because there's just an unlimited amount of liquidity that they can draw at reasonable rates, and that's always been the driver for the asset class improvement. Now, is it a question of things actually doing okay as economically? Not so much, but if you looked at the reports as they come out, there should be no one complaining about the economy because, according to them, it's the most fantastic that's ever been seen. And normal people seeing the real world know that that isn't the case, but this is what they're reflecting in these numbers, which clearly is a disconnect between the reality and from a market standpoint, it's always about perception. So as long as perception can be maintained, market will continue to follow that perception. In this particular case, the market said, hey, when the Bank of Japan tried to, bump things up, they're like, okay, we're going to give you a stronger reaction that will force you to change your course. And they did. So that's how it works. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.